broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. This is a Wednesday morning. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Hi, good morning, Prashant. Morning, Nigel. Well, it looks like things are not too bad. A lot of positive cues that the market has to work with this morning. So it's going to be perhaps a continuation, more of the same, an uptrend.
Well, appears so, guys. And, you know, yesterday the other big trigger that came in, or big cue that came in, was the holiday list of 2024. You have 7 long weekends.
Really?
So, you know, and Sonia, I know she's always on top of it. Oh, Sonia was somebody here. She'll be on top of it. So, you know, it's...
Nigel is the bearer of good news. That's
absolutely, absolutely. I mean, but... you know, yesterday that list came in, and we have 7 long weekends, so it's you can really plan.
Nigel, don't publicize it so much. You know, just quiet, as they say in office. Pehle rumal dal do. So, well, that's good news, Nigel. Thanks for that. Let's just quickly tell you what you need to know as we begin another trading session, and it's basically. Yesterday was different, and yesterday was different because we finally got a negative close, and we're not used to that. It was a pullback. I mean, 0.5%, not even a 0.5% pullback, but the fact is it was red in the screen. Market breadth was negative, and a lot of sectors which have been going up saw pullbacks. We also, in technical parlance, saw something which is called a bearish engulfing candlestick. So the market basically opened higher and then completely gave up most of those gains, and that entire candle was kind of engulfed on the downside, almost all of it. So it's not a technically very strong signal, and it's coming after, of course, a non-stop rally that we've had. I mean, after a pretty large rally that we've had. The question which I think we will know the answer only in hindsight is if we are starting to kind of plateau out a little bit, at least in the near term, and whether this leg of the up move perhaps is done. But I'll come to this question with levels, etc., in just a bit from now. Overnight cues, well, they're pretty positive. S&P was up about 0.5%. The Nasdaq was up about 0.75%, and things are looking pretty okay if you just look at that. You also had the US CPI numbers which came in. They were in line with expectations, the core CPI at least. But I mean, services inflation is still sticky in the US, and that is the reason why. I mean, if you read the New York Times or the Washington Post or the Wall Street Journal, you know, one says inflation in line, other says inflation still a problem, and the third one is something else. So, you know, it basically depends on how you look at it. But the fact is, we will know very soon because the Fed will meet tonight. The decision is tonight. We'll know, of course, the decision tomorrow morning. They're expected to be on hold. And in terms of Fed pricing, post the CPI, there has been no change. So they're still expected to be on hold. And Fed Chair Powell will be addressing the press and taking questions, etc. So it'll be closely watched for only one thing. The market is pricing 100 plus basis points of rate cuts in 2024. Is he going to push back on that, you know, with any great conviction? That is essentially, will he want to tell the market that don't get so excited, rate cuts perhaps are further away than you think. So I think that's what is important to watch. Remember, the risk, of course, which nobody is pricing in, is that inflation will once again be a problem. Markets are not positioned at all for inflation to raise their head once again. So I think at the margin, I mean, that is the risk. Now, US 10-year yields, they lost about 3 basis points. The dollar index fell about 0.28%. I mean, basically just reversals of what we saw the day before. But oil prices have seen a significant sell-off, almost 4%. Now we're at about $73.5 on Brent crude oil prices. I mean, you know, OPEC and OPEC Plus and all these organizations have said, we'll do this, we'll do that, output cuts, rolling output cuts, but market doesn't believe. And prices continue to come off. Now, just to circle back on the Nifty and Bank Nifty, what are the levels? For the Nifty, as I said, you need more confirmation after yesterday's negative close. Confirmation for what? Confirmation for the fact that maybe, you know, this move is maturing now on the upside, which has been, you know, pretty spectacular. How will we know that? You'll watch for a close below 20,850. I mean, that is the low, the recent low, which the market has respected. If we get a close below it, I think that'll be the first kind of signals. On the upside, there is unfinished business at 21,100. I mean, a level we've put out for a while now. So we'll see if that gets taken out. Then, I mean, the point is medium term, the trend is up. We're just talking very near term and asking the question whether the trend is maturing. If these levels get taken out on the upside, then the answer is no, and the market moves on. The Nifty Bank closed lower yesterday, but did not break 46,852 on close. What is that? That is the 40-hour exponential moving average, and that is something which, I'll watch out for. And resistance for the Nifty Bank is the recent high, which is nothing but 47,588. The GIFT Nifty will come up on your screen. It's going to be a 50-point higher start, but I would say if you are trading, give it one more day. You don't have to chase the market higher. You've done very well. The Fed decision, the Q&A, etc., could spring a surprise or two. If not, I mean, there's always tomorrow. It's not as if the opportunity is going anywhere. Sonia.
So, a couple of things, right? On the macro front, I think things are improving. The US CPI, as you said, has cooled off. Even the India CPI, the India inflation numbers are lower than what the street was estimating.
Yeah.
So the poll was 6%. The CPI data came in at 5.5%. Now, let's not forget, it's still above the Reserve Bank's medium-term target of 4%. But a cool-off in CPI is something that may once again give rise to chatter about the rate cutting cycle. Of course, no one is expecting it before the first rate cut before August of 2024. But be that as it may, the rate sensitives may come back into focus. So I'm watching out for, rate sensitives like banks, real estate, etc. Because of the CPI being lower than expected, these are a couple of pockets that could look good. The Nifty will continue its uptrend, no two ways about that. The US markets were quite strong. There's that, of course, that rate decision that's expected. The Dow was up almost 200 points. But the other big trigger is the fall in Brent crude prices. Brent crude is now at a 6-month low, and it's been falling because of inflation woes. Oil marketing companies is something that I'm looking at. There could be a bit of a rally in the oil marketing companies. They have corrected a little bit, so maybe there's some elbow room on the upside. So that's one pocket that I'm watching closely, apart from the rate sensitives like banks and real estate. Now, there was a lot of buying. In the last many days, we've seen buying both from foreign and domestic investors. Yesterday, almost 2,000 crores of buying from DIIs. FI flows have thinned out a little bit. And there's a new IPO that's opening today. The DOMS IPO opens today, so all eyes will be on that as well. Couple of big triggers lined up, but I think the going is good. The setup for trade looks positive today, and we have a couple of positive indicators. The fall in crude as well as cooling off of India inflation, something that the street may latch onto.
Well, Sonia, if we didn't have the Fed meet later tonight, you would be saying go in there and buy the Nifty today. Yeah. Global cues are positives, crude is lower, and the yields as well are lower. Yeah. But today the markets will wait by to hear what the Fed has to say and then take further action. For today's session, the Nifty Bank will be important, particularly in the second half of trade. After a while, it had a bit of an off day yesterday, and today will be the weekly expiry, so expect volatility to pick up in the second half of trade. What did the FIs do? Yet again, they covered some shorts, they added long positions, and now, in fact, the long positioning goes to around 60%. And if you just look at the cues that came in from yesterday, the institutions, FI and DI put it together, they bought close to around 2,000 crores. The FI net long positions are around 50,000 contracts. Ain't we missing the FI shorts, right? In the past, we haven't seen net institutional buying numbers. You had the FIs that were net short, and yet the markets are moving up. Now you have the reverse. You have them adding long positions. You have institutions buying, but the markets were a little bit lower. So that short covering is out of the way. Now we are depending on the cash market buying to push us higher, both from the domestic as well as from foreign sources. Now, if you look at the chart that should come up for you on the screen, in the last 1 week or so, well, the markets are more or less flattish. 4 sessions ago, we went to around 20,850, and 4 sessions later, we're still around those levels itself. And in this time period, you've seen the FI net long position move from around 20,000 contracts to around 50,000 long contracts. And yet, we haven't seen any kind of follow-through. So that's giving you the kind of importance that the cash market buying has to do from here on. The Nifty Bank, well, that's the important one for today. And yesterday, we saw some writing. 47,200, 47,300 calls, both of them saw a fair bit of writing, which brings us to the levels. Since we're seeing writing at those levels, the 47,350 as per the options data becomes important, and the 47,500 call has the highest open interest. So that is the resistance zone. On the downside, the 46,500 level, you don't want that to break decisively. On the Nifty, we've been facing resistance at around those highest levels. So 21,050 becomes an important mark. I say that because the 21,000 call as well has been seeing a fair bit of open interest build up, and the premium out there is around 50 rupees. So that's a crucial resistance zone. And on the downside, once we broke the 20,700 mark, we went to around 20,800. And from there, despite numerous times we've gone and visited that level, we have bounced off that mark. So that becomes a crucial support zone. The gift Nifty suggests a positive opening, but I think the markets will want to wait to hear what the Fed has to say and then take future action. But otherwise, global cues that are coming in very, very positive.
Oh, absolutely. And any hint of the loosening of the monetary policy, something that the street will just grab, right? I'm not saying that it's going to come in this Fed meeting, but that's something that the street is definitely watching out for. On the equities front this morning, we have a comment coming in from Rhythm Desai of Morgan Stanley. So let's go straight to it. He says, with strong earnings, macro stability and domestic flows, it is hard to argue against India's investment case. That said, he adds, an event-heavy calendar with potentially binary outcomes sets the market up for volatility. After having been less volatile than ever, their portfolio strategy includes cyclicals over defensives, large caps over mid caps and small caps. They are overweight financials, consumer discretionary, industrials and technology, and they are underweight other sectors. He says while we are in a macro market in contrast to a stock pickers market, the macro trade could peak in 2024.
All right, we'll get you some money market views now. Kunal Sadani of Shin & Bank says US November CPI fueled dovish bets on the Fed and Powell will likely maintain a cautious tone without considering rate cuts and neither a victory on inflation. However, he adds markets will scrutinize the dot plot to see how the FOMC projects 2024. He says the dollar index is finding resistance at 104.3 levels and crude oil prices have cooled off. For the rupee, he says 83.2 acts as a support while 83.5 is a resistance.
And on the bonds, Neeraj Gambhir of Axis Bank says the lower US Treasury yields and crude oil prices nudged domestic bond yields lower at the start of the week. He says the MPC maintained a status quo unanimously on policy rates. However, he adds worse than expected cutoffs at GSEC auctions led to a sell-off post the MPC. He says the 10-year benchmark bond yield is expected to trade in a range of 7.2 to 7.3% this week as the market awaits CPI data and the FOMC outcome.
Well, we've got a lot of stock-specific action to track for you. For the time being, let's run you through the list. We're looking at Axis Bank, ITC, Indian Bank, Shilpa Medicare, SRF. All of them will be reacting to positive news flow. Add to the list, Interglobe Aviation. On the flip side, we have Loris, All Cargo, KIOCL, and ONGC that will be reacting to negative news flow.
All right, that's basically stocks which are on our list. Dean Kim is Global Head of Research Product at William O'Neill. Dean, good to have you with us here. Is it possible that the move in markets in the very near term is maturing a little bit? I mean, equities, globally actually for that matter, or you think there's a long way to go? Dean, are you there? Okay, I think we lost the line. We'll try and reconnect in just a bit and go back to Dean. So while we do that, let's just take a quick commercial break here. We are back with more on the other side. Stay with us.
CNBC-TV18, embarking on a quarter century of excellence. Embarking on a quarter century of excellence.
Okay, welcome back. Dean Kim is with us, William O'Neill. Dean, good to have you with us here. For the market, is the move maturing a little bit in the near term, or you think this leg has got more to go?
Yeah, I think it largely depends on what the central banks around the world are going to do with respect to fighting inflation. But the good news is, we see inflation coming down globally. For example, we'll hear what Jay Powell has to say tomorrow, but for example, Bank of England and ECB, they're about to announce their rate decision on Thursday. But overall, we think the fight for inflation is working. And also, but there is one lingering question, which is, when we look at the US, the bond yields inverted. So are we going to see a slowdown? And is it going to be a soft landing or hard landing? Now, when I look at market action, the market is pricing for a soft landing. So if that's the case, then I think we will see recovery globally in terms of equity markets heading into 2024.
Dean, hi, good morning. It's been a really good year for the Indian markets and we've discussed this ad nauseum. Do you think we can build on to our gains beyond this 21,000 level on the Nifty? If yes, what is the ceiling looking like for the market now?
Well, I mean, certainly, India has done well. We categorize the market as being an uptrend, but the market is heavily overbought after making year-to-date high, a couple of weeks ago. So we may see a bit of a pullback, but the good news is the 10-day moving average is just 1% below. But overall, we continue to be very constructive on the Indian market. But just be aware that we do see signs of potential short-term cooling off, which is fine. We just want to make sure that the market is going to catch short-term support at the short-term moving averages, and then work itself back up again. In terms of how high it's going to go, I think it's going to go much higher because of the fact that let's face it, China is in trouble. And all attention is going to be in India. And when you look at the bigger themes that are out there in terms of moving companies out of China, Southeast Asia, including India, they're all going to be beneficiaries. So I think we may see a change of character in terms of economics going forward.
Hi, Dean. Morning. What about crude oil prices? I think we're just 5% away from the 52-week lows, which is great news from an India perspective. What's your view out there?
Yeah. I mean, right now, oil is sitting at 71. Next support is $69. There is some resistance at the $72 range and then 75. But when you look at it, overall, it's very constructive. So is it a question of the oil market sort of pricing in a slowdown? Potentially, but that's good news for India for sure.
All right, Dean, we leave it at that. Thanks a lot for joining in. Appreciate your thoughts. So that's the global setup, and the prognosis on India continues to be positive, but plenty of stocks to talk about. So let's get straight to it. First up on our radar is Axis Bank. Abhishek is here to tell us why you should be looking at that one. Abhishek, good morning.
Good morning, Sonia. So sources tell CNBC-TV18 that there will be a block deal in Axis Bank today. So the seller is likely to be Bain Capital. Shares on offer is about 3.34 crore or 1.1% of the equity. So we have the seller's name, BC Asia Investment, and about Integral Investment South Asia. So the floor price is around 1,109 per share, which is at a discount of close to 2% to yesterday's closing price. And there is a lockup of 90 days, which means that they will have some residual stake post this stake sale. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, let's hop across to Mangalam. Yesterday, there was an analyst meet on ITC. Mangalam, what are the takeaways?
Well, the analysts are happy with the key takeaways. In fact, the big headline from there was the company is focusing on growth and higher profitability in the FMCG business. And they've reiterated the target of 80 to 100 basis points margin improvement every year as well. They've also revealed the ITC Next growth strategy for the company to create structural drivers of competitiveness for the business itself. And in that, exports and value accretive acquisitions are also integral elements of this ITC Next strategy. The other new vectors of growth that they're pursuing in the agri-business are through higher value-added products and services. And the DG Arc announcement that the company made is to leverage the power of digital to capture efficiencies in product supply chain and distribution. Brokerages, we have CLSA. They have an outperformed rating with a target price just under 500 rupees. They say that the focus on FMCG business will continue and the cigarette business will consolidate. At the same time, they're opening new higher margin verticals in their nicotine business, in agri business. And Motilal Oswal too has a buy rating with a target price of 535. They say that there is improved earnings visibility in the near term, and with the stocks seeing relative demand, strength and 3 to 4% dividend yield, it's not a bad bet.
Thanks very much for that. Well, let's go back to Abhishek. Indian Bank, there's a QIP there. Abhishek has got details. Abhishek, over to you.
Indian Bank has launched a QIP. Now, sources tell us that the issue size could be about 4,000 crores. So there is a base issue of 2,500 crore and an upsize availability of about 1,500 crore. Now, the indicative price is about 394 per share, which is at a discount of close to 10% to yesterday's closing price and about 4.9% to SEBI's floor price. So BRLM to this issue is Axis Cap, IFL Securities, ICICI Securities, MK Global and SBI Cap. Now, calculation shows that if at all they raise this 4,000 crore, Tier 1 ratio can improve to 14% from 12.6%. Book value can increase by 0.6%. With an equity dilution of 8.15%, the net worth increases by 1.4%. Back to you.
All right, thanks a lot for that. Well, Vivek is with us. He's going to talk about Laurus Labs, Shilpa Medicare, and why you should be looking at those stocks this morning. Vivek, over to you.
Well, good morning. Couple of pharma stocks, like you mentioned, on the radar today. Laurus Labs. So what's actually happened is that the US FDA conducted an inspection at the company's Visakhapatnam facility. Now, this particular facility belongs to Laurus Synthesis, which is a subsidiary of the company. Post the inspection, the US FDA issued 5 observations in the Form 483. The other stock on the radar is Shilpa Medicare. Interestingly, one of the units of the company, Unit 6, has received an approval from TGA, which is the regulatory body of Australia, to go ahead and manufacture and test oral mouth dissolving films. The company says that this particular film or this particular method of treatment offers significant advantages over the conventional oral dosage forms. Along with that, the company says they have a significant pipeline of products in this particular dosage form, so that you could see some green as far as Stride is concerned today.
Okay, all right. Thanks a lot for that, Vivek. Well, let's hop across to Sonal. She's here to tell us about some more stocks and news. Sonal?
Good morning, Nigel. Well, let me start with SRF. They have been on a capex stream. Now, they had announced 4 plants, and 2 of which have now been commissioned and capitalized yesterday at an aggregate cost of around 225 crore rupees. So that's a green on the stock. All Cargo, well, they did put out the monthly update for the month of November 2023, where volumes, they were up 4% on a YY basis, but they declined 12% on a sequential basis. For KIOCL, there is a temporarily suspension of pellet plant unit at Mangalore from December 12. And this is because of non-availability of iron ore fines. So that stock will be on our radar. And Interglobe Aviation, sources here are suggesting that government has granted 6 months lease extension to Indigo for the use of Turkish Airlines B777 aircraft. Indigo has been operating this aircraft from January end 2023. An extension is for the second leased aircraft. So this is a positive news for the stock.
Okay, all right. Thanks a lot for that, Sonal. And let's wind this down then with Manisha, who's joining us to tell us about the slide we've seen in crude oil prices. Manisha?
Thank you for that, Nigel. Well, yes, we have seen 3 to 4% of a decline for the crude varieties, both of those, and we are trading at around 5 to 6 month lows with this kind of a cut coming in. Well, the U.S. inflation rise has bolstered view that there wouldn't perhaps be a rate cut in the first quarter of 2024. I mean, we will hear more about it today in the evening, though, when the U.S. Fed meeting decision comes out. Apart from that, there also are doubts that the OPEC cuts will offset oversupply. There also is a report from EIA saying that they have revised the crude prices down by $10 for 2024 to average $83 a barrel. The markets also are looking out for the OPEC monthly report that comes out today, and the street is also looking at weaker data from China. That continues to weigh onto the markets as well.
All right, thanks a lot for that. Here's a quick recap of our top stocks with positive news flow. Axis Bank, ITC, Indian Bank, Shilpa Medicare, SRF and Interglobe Aviation. While stocks with negative news flow, there's Laurus Labs, All Cargo Logistics, KIOC and ONGC. But let's focus on PI Industries now. It was the big mover yesterday. The stock ended with a 10% cut. For PI Industries, the competition in the pyroxasulfone market is now intensifying with the entry of Rainbow Agro in that segment. So to discuss more on this development, Prashant Biyani of Elara Securities joins us now. Prashant, thanks a lot for joining in. Since you track this stock closely, do you think it's going to end at this 10% cut, or because the competition is building up, do you see more downside in both the stock as well as the earnings? What are your own forecasts?
So registration for pyroxasulfone or patent for pyroxasulfone was already going to get off patent starting 25 in major markets globally. That was already known. So new capacities coming in China may be a risk, but Chinese are more masters of creating capacity. But on registrations and expanding their distribution reach in Latin, Europe or North America, they struggle a bit there. So I don't see it as an immediate risk. And beyond, immediate term, in the medium to long term, we were already knowing that pyroxasulfone is going to get off patent. So there might be some impact on PI. But having said that, the company has been doing quite a bit amount of work to diversify their dependency on pyroxasulfone. So there is no immediate threat as such to PI.
Okay. That's interesting. So you're saying there's no immediate threat on PI at the moment because you don't see this Chinese competition as a big risk, at least for now. So you're not cutting your earnings estimates, your margin guidance, your margin estimates for the full year for FY24 and 25. Is that correct? And also, what do you do as an investor in the stock? Do you buy the dip? Are you cautious here? What's your view?
So for FY24, we are not reducing our estimates. depending on how the global CSM and active market pans out for next year, and also how is the management commentary for next year regarding their CSM business, we will see how the trajectory for FY25 earnings go. But we also have a sense that PI might be getting new business from other companies as well due to their recurring efforts on diversifying their customer profile as well. Plus, they are also trying to diversify their or increase their chemistry capabilities to many chemistries like phosgene, fluorine, and advanced level of fluorination chemistry, then enzymatic chemistry. So we don't see a major risk in terms of earnings cut for PI.
Hi, Prashant. Morning. Thanks so much for joining in. Well, they were factoring in a growth of 20% for this year, which you're saying that they'll be able to do, right, for FY24?
Yes.
And for FY25, what are you penciling in terms of growth? I ask you this because last night as well, you had one of their large buyers, that's Kumai Chemicals, that went ahead and trimmed down their guidance. So will that as well be an additional negative, or is that all in the price?
So the CSM contracts generally happen annually. So for next year, how is the CSM contract for PI with its clients? We are yet to get an update on it, but depending on how the contract terms pan out, there can be some amount of decline in earnings for 25 if there is inventory accumulation in pyroxasulfone market globally. Crop-wise, pyroxasulfone goes in wheat, corn, and soybean. So globally, for these three crops, we are not seeing any immediate risk as such.
I think for PI, 60% of its export revenues was this product. Sales from this product were some 900 crores. So it's a pretty large and significant product for them. But as my colleague asked you, with the price cut that we've seen, the stock price cut that we've seen, is everything in the price, or do you think is it a buy at this level for those who are watching? It's a high quality name. It's kind of ducked the overall downtrend which other chemical and agrochemical stocks have seen. But is there what to do here? Would you buy?
So I will await for more clarity as such, but as far as PI and pyroxasulfone is concerned, because it's a high quality company, so dependency on pyroxasulfone has increased this year. But it is not the case that it is only pyroxasulfone which will drive the business for the future years as well. As I told, they are having a good order book as well as new molecules which they are going to manufacture for their clients within the AgChem space. In pharmaceutical business, they are also trying to build building blocks for future. In electronic chemicals, we believe they are trying to get into that space as well. So even if there is an earning risk, it is going to be only temporary.
All right, we'll leave it there, Prashant. Thank you very much for those pointed remarks, and I think very helpful to get those for our viewers early this morning. Thanks indeed for joining us. Well, so temporary risk, high quality company, but he'd want to wait for more clarity because it's a bit of a flux. There perhaps will be some downside on this product, as of course the market already fears. But the other product portfolio for PI Industries is pretty rich. The order booking, etc., seems to be very strong. So that's PI Industries, very sharp sell-off in the last 60 minutes or so of trade, ended about 34.84. We'll take a quick break here. Deven Choksi of DR Choksi FinServ also will be with us. We'll address PI and more names on the other side. Stay with us.
CNBC-TV18, embarking on a quarter-century of excellence. Embarking on a quarter-century of excellence.
Welcome back. Hope you're having a good morning. Well, the markets are indicating we're likely to start off in the green, but it's going to be a busy day of trade, and then we'll hear from the Fed later tonight. To help us out with some analysis on stocks, though, Devin Choksi of DR Choksi joins us on the show. Hi, Devin. Good morning. Thanks so much for joining in. Well, we already discussed PI industry, so I wanted to ask you another big move on the final hour of trade yesterday. That was SpiceJet. You know, they've got that much-needed oxygen, so to call it. They've got funds that are coming in there, but it's going to be a massive dilution, and a whole host of names have come in there. What's your view on SpiceJet at around this 55 to around 60 rupees?
Nigel, good morning. Well, I think much needed capital as far as this business is concerned, in this company in particular. I think they are getting a little luckier to get this particular capital, I suppose. On one side, there is a huge demand scenario which is there already, and at the same time, it is going to expand. Entire aviation business is becoming, and passenger aviation business is becoming more capital intensive. At least I think in next 5-10 years, I think we are likely to see significant amount of capital infusion in the business from practically all the players, given the size of the market which they are catering to. In my viewpoint, I think the company will probably have a relatively better time as far as I think the outlook is concerned, given this money in the balance sheet. But at the same time, as I said, I think for investors, I think they have to keep balance sheet ready, the cash ready for the subsequent round of investment also into this company, which is likely to be a continuous process as I see it. Currently, I think whatever is happening is, I think, repairing the existing balance sheet, infusing funds for taking a further amount of expansion. But at the same time, I think additional amount of capital would be required, not only for SpiceJet, but I think for the rest of the players also in the industry, given the size of market that they're catering to. So I would say that from an investment perspective, the company which is asking for more capital every now and then, we would probably concentrate on those companies which generate cash and have a free cash flow and give it back to investors. We'll stay focused on those businesses and those companies in our investment portfolio.
All right, Devin, hi, good morning, and thanks for being with us. On PI Industries, what are your thoughts? Would you buy now? Would you be cautious?
Yes, Sonia, good morning. Of course, I think this company remains, I think, absolutely very convincing company from a point of view of the business and the technology on which I think they have been successfully developing the products in the API formats. I think this company probably had to face this particular situation which they are currently into. A single product dependency always invites some amount of competition eventually. But the way in which I see this business, I think they have sufficient amount of ability to meet the challenges. The margins will probably remain under somewhat pressure, but they do have the ability to meet the challenges, particularly in the form of, I think, bringing down the cost of production for them and protecting the margins to a certain extent from the competition, which is now emerging on this particular front. At the same time, the different variety of portfolios that they are basically nurturing and systematically bringing down the risk on one single product, I think, has been a continuous process. The other portfolio of products, I think, are also likely to contribute in a given period of time. So maybe one can argue that in the near future, because of the fairly good valued stock at this point of time, you might not see an upside immediately. But maybe I think the downside would be largely limited to, I think, the exit of some of the existing players. But otherwise, on the merit front, I think I don't see too much of a downside as far as I think the business is concerned.
Devin, two names from yesterday. Good morning. One is IRDA. This is incredible, right? Low last month was November was 50. It's 100 yesterday. So huge volumes. We know the story. But it's now trading at 3 times book a year forward. And the other one is J&K Bank, which we just want to get your thoughts on. Again, you know, it's done. The stock's done well, but if things are really going to pan out the way, you know, they can really penetrate that market and open up new avenues. I mean, it could do very well. So your thoughts on both these names, IRDA from here, what would you advise investors to do, and J&K Bank?
Yes, Prashant. Good morning. Well, as far as I think the IRDA is concerned, there is nothing which has changed between the listing time and today. The fundamentals have remained as strong as they were before at the time of listing. And probably I think the prospects remain equally strong, given the kind of concentration which they are having into the renewable space on the lending book side. So the growth is in the business is going to continue. Now, I think what has changed between the listing and today, I think is important part is most of the funds basically are wanting to have the new paper in their portfolio. And that's the reason for which I think you are finding many of the newly listed stocks are remaining in demand, because I think there is requirement to have these stocks in the portfolio. The other argument to this existing list of companies which are listed in the marketplace, many of the funds, I think, have got most of the exposure limits completely exhausted. In fact, I think when you study the equity portfolios of most of the mutual funds, somewhere around between 65 to 75% of the portfolio in most of the stocks, particularly I think either in Nifty 50 or Nifty 500, if you look at it, most of the stocks I think are remaining common in a given fund vehicle, I think, which they are basically operating. As a result of which, there is a compulsion to add new stocks into the portfolio. Also because of the fact that the new funds are getting into the system. Monthly SIPs have touched 17,000 and is likely to cross 25,000 crore in a near future from now. So from that perspective, if you look at it, I believe that I think these are the stories which are propelling the stock price, it's getting a tailwind in the stock price. Otherwise, the fundamentals remain as promising as they were before. Maybe the valuations have scaled up to a fair value at this point of time.
Okay, all right. Devin, request you to just stay with us. For the time being, let's turn our attention to Canfin Homes. Yesterday, the management told CNBC-TV18 that there is no other incident of fraud at their branch that's at Ambala, and they have lowered their loan growth guidance as well. Abhishek took us through that interview yesterday. He's joining in with the key takeaways from that conversation. Abhishek?
Well, yesterday in trade, after the interview, we saw sharp surge in the stock price as well. And we also have Morgan Stanley, who has quoted our interview on the note that they have written on Canfin Homes. They have an overweight rating and a target price of 1,000 per share. Now, what the management did tell us is that they have carried out checks on all the branches. There is no other incident of fraud in any other branch than Ambala's incident that they had faced earlier. So funds were siphoned off to personal accounts by a staff member, and funds were going from a pool account for all the branches with respect to disbursers. So there is no impact on NPA or the provisioning part. They do not have any issues over there. And now they have decentralized the branches. All disbursers are now happening from the head office only. After the approval comes in from head office, the disbursers are made. Q3 FY24 disbursers will be flat on a sequential basis, and FY24 loan growth guidance has been lowered to about 15% from their earlier target of 18 to 20%. Let's hear out the management as to what they had to say.
This particular incident we did, in fact, we reported also to the stock exchanges and to the investors that we did carry out a thorough check of all our branches. So right from, all our 193 branches, right from the period from April 2021, we carried out this exercise to see if in a similar kind of an incident or some such big this thing was there in any other practice was there in any other branch, and it was negative. So there was no other such incident in any other branch. This was a very isolated incident at one of the specific branches of Ambala. The fact is that in this quarter also we've had a little bit of impact, and in most likelihood this quarter is also likely to be a little flattish for us compared to the previous quarter that we've had in terms of disbursement. So current year, these process changes that all we are having might slightly dent our plans to go for a 18 to 20% disbursement growth. We might probably end up around 15%. But going forward, in the long term, at least I am quite positive that we will stick to our target of 18 to 20%, but not this year. So it's not something which will affect our NPA, because this was purely, there was no asset to back it up. It was purely funds which were there in the account were siphoned off to personal accounts. So there is no asset to back it up, and it's not an asset fraud. It is basically cash defalcation. So in that sense, there is no NPA which will be impacted because of this. The NPA which would have been impacted only in the event of an asset fraud. The pure write-off or a pure provisioning that we have to do, which we have already done. We have taken the 100% hit upfront in the second quarter results itself for the entire amount that was identified.
Okay, well, the stock had fallen quite a bit, and the management clarifying on CNBC-TV18 from a high of 840. I think yesterday's low was, 730 odd rupees in just 4 trading sessions. And then, the management yesterday on CNBC-TV18 clarifying some of this stuff. So that's Canfin Homes. Anuj is standing by with a quick check on how he's looking at the trade setup. Anuj, morning.
Morning, Prashant. Well, you know what? The inflation data, as expected, surprised on the positive side for the market. This happens normally. For the last 2 months, it's happened that in uptrend, you keep getting some positive surprises, and the market's been in some kind of an uptrend. So you did see that positive surprise. Of course, the added trigger today is what you have on the crude prices, which again saw a bit of a decline. So that's something to keep an eye on. Also, what has happened is this time consolidation is allowing moving averages to catch up. Nifty's 5 and 10-day exponential moving averages are now catching up. The 5-day exponential moving average is at 2870 and 10 days at 2676. So perhaps another 2 days of consolidation won't be a bad thing. Not saying that will happen, but it won't be a bad thing. The trend is up as long as the Nifty is closing above 20,850. Of course, from the global side, I was reading a report that today's policy could mark a shift to dovish stance, and markets would start to price in rate cuts from here, from as early as May 2024. Let's see if Mr. Powell obliges. Coming to today's trade on the Nifty first, yesterday we made an outside day. The bar, that is outside day bar, which is the high and low, both outside the previous day's range. So in that sense, it gives us crucial levels to watch out for, yesterday's high and low. The first support zone is 19,840 to 19,860, which is a recent low. And the bigger support is 2750 to 2780. It should have been actually 2840. I made a mistake there. And on the upside, the first resistance is at 21,038, which is yesterday's high. And the bigger resistance is 21,150, going by the options data. On the Bank Nifty, a lot will depend on whether the axis block happens in or outside of that block deal window. But purely in terms of levels, 47,004 to 46,800 on the downside and 47,230 to 47,500 on the upside.
All right, thanks a lot, Anuj. And what stayed with me is the fact that if the FOMC talks about any hint of a dovish stance, that the market will definitely latch on to that. So perhaps that's the next big cue to watch out for. Let's take a quick break. On the other side, Shalabh Saxena, the Managing Director and CEO at Spandana Spurti Financial, will be joining in for a discussion on their business and the vision forward. Stay tuned.
CNBC-TV18, embarking on a quarter century of excellence. Embarking on a quarter century of excellence.
Welcome back. Well, that large trade on Axis Bank actually has taken place, and it's happened in the pre-open window. So it'll be interesting to see how the stock reacts in today's trading session, because the market had a sense out there would be some kind of shorting that would have been seen out there, which will have to run for cover. So we'll keep an eye out on that stock, yesterday ending at the high point of the day. Spandana Spurti, though, that's the next stock on our radar. The company has laid out their vision for 2028. They are targeting higher loans from existing borrowers and also looking to bring their cost of borrowing down. Mr. Shalabh Saxena, the Managing Director and CEO of the company, joins us on the show. Hi, Mr. Saxena, morning, and thanks so much for joining in. Well, let's focus on the dispersals in weekly. You're saying that you're looking to increase it to around 70-80% in the coming years. Tell us, how will this work, and will collections also be weekly?
Yeah, so good morning to you and all your viewers. The fundamental shift in the model that we at Spandana were doing, over the past few years, we are trying to move from a monthly to a weekly model. The weekly model, or rather the microfinance, inherently is a high-touch model, and hence it's very important that you are closer to the customer. A weekly model allows you to meet the customer every single week, 52 weeks in a year. And that's the time when you do a health check on the customer, the financial health check of the customer in terms of if she wants a new loan, or how is she doing in terms of repayments. So at this point in time, Spandana 2.0, which is what we've released about 6 quarters back when we took over, the company was 100% monthly. We've opened 500 new branches, which are all weekly. And over the next few quarters, we are going to transition the monthly model to a weekly model as well, because we, the management, feel that inherently a weekly model is much stronger than a monthly. And yes, the answer to your question is, both the disbursement and the collection of installments is weekly.
Okay, disbursement and collection of installments is weekly. How do you plan to transition to digital payments in an effective manner? Because I think, once you do that effectively, that will help you in improving your collections as well.
Yeah, so, so there are two answers to this. The first is our disbursements are 100% digital. It straight away goes into the bank account, so there's no cash involvement. However, when it comes to collection, what's very, very critical is, we as a company follow the joint liability group model, where it is important and imperative that the customer comes into the center meeting at a predetermined time. And that is when, the collection happens. So at that point in time, we collect the money, which is at this point in time, almost 100% cash. There are two reasons for this. The first, digital options are there for the customers who are not around at that point in time, if they have migrated or they are at some other place. But that is more an isolated incidence, because what we insist on is a physical collection, so that the customers come to the meeting. Our experience has been that I'll just finish. Our experience has been that if you give that option to the customer, they stop coming. So there is some discipline that needs to be installed. But yes, way forward will be digital collections. At this point in time, we are all physical.
Shalabh, hi, good morning. Is there a risk of over-leveraged customers? I mean, borrowing from various institutions. How would you ensure that it's not a risk and, you get paid?
Prashant, what has happened is, ever since the new regulation, the FOIA regulations of Reserve Bank has come, they are in vogue since March of 22. What we have, we follow it strictly, and there are very clear prescribed guidelines in terms of what are the household incomes that you can source the customers, what is the household income of the customer, and this includes the income of the spouse as well. And corresponding to the income, there is a liability where there are very prescribed guidelines. So if the customer falls into that bracket, is when you kind of trigger a new disbursement or a loan. Otherwise, you stay away from the customer from a microfinance point of view. So we follow it diligently, and that kind of ensures that the leverage part is taken care of, Prashant.
Okay, all right. Mr. Saxena, if you could tell us what was the cost of borrowing of the last quarter? And you've been mentioning that you're looking to reduce the cost of borrowing. So how are you changing your borrowing mix?
Yeah, so, the last quarter, the marginal cost was about 12.3%. And I think on your show, the last time around, I had said that, I think my guess is that we've kind of peaked out from a cost point of view. And the only way we as an institution will go now will be south from, from a pure play cost of borrowing point of view. The reasons are as follows. We had a growth target to pursue, so we borrowed slightly more than what was comfortable from the capital market. The bank contribution was about 49-50%. So we intend, from a diversification point of view and raising and improving the mix, we intend taking the bank share up from the current 50% levels to about 65-70 in the short term. On the capital market side, the current number is about 28% in the mix. That we are planning to get it down to about 15%. And we will now explore the offshore borrowings, the ECB route, etc., so that we inherently have that cost advantage.
Shalabh, we'll leave it there. Thank you very much for joining us with that crisp sort of take in terms of how the business is going to pan out. Appreciate it very much here on CNBC TV18. Hope to speak with you soon again. We'll take a very quick commercial break here. Up next, Mitesh Thakkar and Sudarshan Sukhani will be joining in with their technical trading ideas. And I think we're about 4 minutes away from the pre-open session. Stay with us.
CNBC TV18, embarking on a quarter century of excellence.
Go powered by
CNBC TV18, embarking on a quarter century of excellence.
Welcome back. Let's take a quick check on what you should be doing on the technical front. Mitesh Thakkar and Sudarshan Sukhani are joining in. Gentlemen, morning to both of you. Sudarshan, it's been a great ride for our markets. You think we can build on to it, today? And if yes, what's the best way to approach it?
Yeah, good morning. See, the markets still continue to remain in an uptrend. Yesterday, I had suggested we will see sharp and sudden dips, and that's going to be the pattern for the next few days or maybe a couple of weeks. but the trend remains up. So these dips should be used as buying opportunities. Keep a 150 or 200 point stop loss from your entry price, and your entry should be on a dip. But stay long in the Nifty and in the Bank Nifty both.
Okay, stay long in the Nifty and the Bank Nifty. Mitesh, would you concur with that view? Good morning. And if you're suggesting to stay long in the Nifty, what are the levels we should be looking at?
Good morning. I think, one, staying long is definitely the best idea. This is a market which is biased on the upside. Yesterday, we had a fall. I was hoping we'll get a minor gap down today, because around 20,700 is a very good trading support area, and I would have bought aggressively in case we would have gone closer to that level. But let's see. I think if we don't correct too much, then I think we might just consolidate for the next few days. But eventually, I think we'll go higher, and I am looking at Nifty targets of around 21,250, 21,450 from a trading perspective, and even higher targets if you take a slightly medium-term kind of now. So stay long. There's no doubt about that. But I think use pivots, support levels to add on to long positions or buying.
Okay, all right, Mitesh, why don't you go ahead and tell us your picks for the day?
Morning, Nigel. I have all buy calls today. HDFC Life has been on the radar for many days. Yesterday was also some kind of a breakout there. Buy here with a stop at 694. Look for targets of 735. Pidilite is a buy with a stop at 2580 for targets of 2660. Sorry, one sell call. That's on Maruti, which had a negative candle and negative crossovers on moving averages and indicator charts. So Maruti is a sell with a stop at 10,525 and look for targets of 9,900 here. And also a buy on Equitas Bank. Again, very good price and volume action. So buy here with a stop below 100 for a first target of 110.
Okay, gentlemen, morning. Sudarshan, what about you? What are your trades?
Well, I have the one intraday short, that is Berger Paints, which are disappointed. A trading range which should have broken on the upside is now suggesting a downside breakdown. So buy with a intraday short with a stop above 580. HDFC AMC is a buying opportunity. The stock has been having a very decent up move. Small consolidation, likely breakout. Buy with a stop under 2970. Lupin is a buy on dips stock. It has come down to a significant support level. So it's an ideal case of a buy on dip. Buy with a stop under 1220. And Ramco Cement is again broken out of a small consolidation. It's in a strong uptrend. Buy with a stop under 1025.
All right. Well, let's do one thing. Let's thank our technical guests for joining in. And let's also focus on one of the latest debutants of Dalal Street, FedFina Financial Services. Q2 was a good quarter for them, actually. They just came out with an update a while back saying that the disbursement growth was very good. Assets under management has been strong as well. To discuss how the business momentum is, what's the outlook from here on, we have Anil Kothuri, who's the MD and CEO at FedBank Financial Services. Anil, thanks a lot for joining in. Your disbursement growth was quite strong. Year on year, it's a 28% growth. Can you just break it up for us? Where did you see the maximum amount of demand in terms of gold loans, business loans, etc.? And what kind of sustainable disbursement growth are you looking at for the full year?
Good morning. Yeah. So what we are seeing is a consolidation of the trend post-COVID, where people are taking more and more loans for working capital as confidence rebounds into, the small businessmen's lives. Okay, so that's a trend that we are seeing. Our disbursals are up about 29% year on year, and that's a trend that will continue, because the same time last year was when we had just come out of COVID. So what we are seeing really is a consolidation of that trend.
Okay, so in terms of numbers, can you give me some numbers? What is the disbursement and AUM growth that we're targeting by the end of FY24 and FY25?
So what we are saying is that a growth of between 25 and 30% in terms of AUM is achievable, and that will be on the back of a disbursal growth of about 30-ish%. Now, our disbursals are of two kinds. We have the gold loan disbursals, which run off within about 4 or 5 months, and we have installment loan disbursals, which are more long-term. Okay, what we're seeing is that the installment loan disbursals are growing at upwards of 30%. So therefore, the bias is closer to 30 than 25 in terms of AUM growth.
Okay, all right. Hi, sir. Good morning. Thanks so much for joining in. Tell us, how your mix will change as well. As of now, I can see mortgage and business loans, they are growing at a fair clip. Tell us how does that fit in terms of a mix, gold as well as both these two?
So we have gold loans and non-gold loans, and the dynamics of growth of these two businesses are different. Gold loans are dependent on the price of gold. And over the past few months, we've seen an uptrend in the prices of gold. So as long as that continues, there's an upward bias in terms of the AUM there. The non-gold portfolio will be weighted in favor of our small mortgage business because that has the largest behavioral tenor in terms of 8 years, whereas the rest of the businesses run off between 3 and 4 years. So by and by, you'll see that the small mortgage business will keep trending up from the current proportion of 25%, and it should keep inching up quarter on quarter. That's the guidance. And what happens to gold really depends on the price of gold in that specific quarter. We are currently at about 33-ish%. That should trend down to about 28-ish% over the next year as the installment loan disbursals and AUM growth picks up.
Mr. Katuri, hi, morning, Prashant here. I mean, so your loan book is at about 10,000 crores or so, right? Is there a ceiling or so till where you can grow at a pretty fast clip, and then so I was speaking with another bank CEO, and they said, well, 15,000 crores is essentially that number to their mind, where you can kind of continue to grow at a pretty fast clip, and then things start to moderate. It gets a little more trickier. You're at 10,000 crores. Just wanted your thoughts on that, sir.
So there are two ways of looking at growth. AUM growth is really an outcome of all that you do at work. Okay, the way we measure ourselves and really what determines our growth are the input variables, which is the number of locations that we are in business, the number of branches that we have, and the number of people producing on a daily basis. Okay, that output does not need to change materially for us to maintain our current growth rates. Okay, at some point in time, you will need to add people and capacity to maintain these growth rates. But at this point in time, given the long tenor of the loans that we originate, I think there's not a great increase in input that is required to achieve the desired output.
Okay. Finally, is there scope to improve your asset quality further?
Our asset quality has stayed flattish as at about 2.3%. Okay?
Yes.
And we believe that over the next 2 years, as the environment stays benign and stays conducive to growth, asset quality should improve from here on.
Okay, all right. Final question then before we let you go. I recall you telling us that because you'll have raised some capital, the cost of funds will come down, which will help your NIMs as well gradually improve. So give us an outlook on the NIMs, and your cost to income as well. It's likely to decline. I think it was around 60% odd. You had hinted that it moves down from here on. So by the end of FY24, how will both these two numbers look like?
FY24 is barely a quarter away, so there will not be a substantial change in our cost to income. But over the medium term, what's going to happen is that we will realize two kinds of benefits. One is of greater proportion of capital funding the assets. So as a consequence, the NIMs will mathematically trend up. That is number one. And the second thing is that as our operations continue to be efficient and we achieve greater scale, our cost to income will improve. So I think over the next year and a half, our cost to income should improve by 4-5 percentage points. So that's a trend that we will try and build to. And our NIMs our spreads will stay flattish, and the NIMs will improve to the extent of the capital that we have.
All right, we will leave it at that. Thanks a lot for joining in and giving us an update on the business. That's a 25 to 30% AUM growth that's achievable for FY24. And they're saying, FedFina is saying that the asset quality will continue to improve as well. The other data point that we're tracking this morning is 2 IPOs open today. There's DOMS and India Shelter. The question is, should you be subscribing to these IPOs? Catch the management if you want to make an informed decision. That happens on CNBC-TV18 all day today. We'll be back in just a bit. In fact, some 9-10 calls coming in as well. So let's just get the pre-opening rates. They've settled in slightly higher. So 23 points higher on the Nifty. It's now just dithering around that 21,000 level. Axis Bank, ITC. ITC is actually a big mover this morning. up about 1% after the analyst meet where the management spoke about focusing more on growth and on profitability and maintaining their margin guidance. Sudarshan Sukhani is back with us. Sudarshan, what's the big call at 9:10?
Consider buying HDFC AMC with a stop under 29.70.
All right, and Mitesh, what about you?
HDFC Life buy here with a stop at 694 for targets of 735.
Okay, let's get straight to the stock board now. If you missed out on any of the stocks, PI Industries definitely has been the big talking point in the last 24 to 48 hours. Sonal is here to give us the latest on that. Sonal.
Thank you so much for that. Well, after that big fall yesterday, around 10% on PI Industries stock, which is the biggest fall that we've seen since COVID times, brokerages have written on the possibility of an impact on their biggest product, seeing competition from the Chinese player. Motilal Oswal says that pyroxosulfone is one of PI's key molecules, around 35% of the total revenues coming in from there, and global demand for this product has been robust. And this product was one of the key factors for PI's strong performance over the years as well. Rainbow Chemical, a Chinese company, has announced foray into this particular product with a capacity of 2,000 tons per annum. This is the third Chinese company which is looking at growing pyroxosulfone market, and this means more competition as well, which could pose a threat to PI Industries. They say this can have a negative impact on PI's exports. Their biggest client as well, Kumei, that is a Japanese chemical company, has also given some guidance cut indications talking about demand problems as well. This indicates demand pressure. They say since this is one of the largest clients of PI Industries, a guidance cut could translate into a weak outlook. However, the management reiterates their 20% growth guidance for the company. Nuvama says it is a key product which has been facing the risk of product going off patent in key markets like the US. This contributes 56% to the export revenues, around 35% of total revenues. Potential entry of generic players could be a problem. This will increase competition. However, they also are bullish on the future prospects of the company. Also remember, the largest customer, that is Kumei, the Japanese chemical company, will be releasing their FY24 numbers tomorrow. So we'll get more sense of this particular product, the patents and the demand as well. So we'll be watching out for that one.
All right, Sonal, thanks very much for that. So PI Industries in focus. I think in the pre-open, it's starting about 1.75% higher. Indian Bank is the next one. The QIP in focus. Abhishek is here with more. Abhishek.
Well, Indian Bank has launched QIP. Sources tell us that the issue size is about 4,000 crore with a base deal size of about 2,500 crore and an oversubscription of about 1,500 crore. There is a strong demand over there is what sources are telling us. Indicative price is about 394 per share, which is a discount of close to 10% to yesterday's closing price and about 4.9% discount to SEBI floor price. So the BRLM to the issue is Axis Cap, IFL Securities, ICICI Securities, MK Global as well as SBI Caps. Calculation shows that if at all they raise 4,000 crore, the tier 1 ratio can improve to 14% from 12.6%. Book value can increase by 0.6%. Equity dilution of 8.15% is seen. The net worth can increase by 8.8%. Back to you.
All right, thanks a lot for that. We have less than a minute for the markets to open. So, let's just take stock of that. We also are going to talk about, you want to quickly mention Canfin Homes as well?
Maybe we have time. A minute. Canfin Homes in the pre-open should come up on your screens. Sonia, the stock fell, right? I mean, 13% or so in the last few trading sessions or so. The fear, of course, was the fact that there was a fraud in the company. The management, of course, clarified yesterday, and the stock's up about 1% or so at this point in time. So yesterday, 3.25% recovery from the lows, and today another 1% in the pre-open. We'll address this once we have the market open itself.
Okay, well, looks like the market opening is going to be a positive one, right? We have 30 seconds left. There's a lot actually for the markets to latch on to. Inflation in India was lower than what the street was expecting. US inflation has cooled off. Bond yields have cooled off in the US. Crude prices are lower as well. There's been solid buying coming in from domestic institutional investors. And we've had a strong US markets ahead of the Fed rate decision. So the recipe is good. The cocktail is good for the markets to sort of build on to its gains. Let's see any hint of dovish signals from the US Fed will be latched onto by the bulls. For now, market has started in the green, 20 points in the green. So just wait and watch mode perhaps ahead of the big event later in the evening. 20,900, 20,923, which is a gain of 20 points. The sensex is up about 70 odd points as well. And the advanced decline ratio is well in the green as we speak. The big movers, Axis Bank is up almost 0.6%. So that is a big mover this morning. BPCL, we were talking about oil marketing companies, right, in pre-opening, that the fall in Brent crude prices is positive for them. So BPCL is up in the green. ITC, on the back of positive statements from the management, is up about 1%. NTPC, UPL, Tata Steel, Eicher Motors, all in the green right now. Hindalco, HUL and Wipro are a couple of other stocks. So what is dragging the markets this morning? ONGC, TCS, Apollo Hospitals, HDFC Life and Kotak Mahindra Bank, couple of stocks that are down about 0.5 to 1% or so. Now the market is trending a tad bit in the red. It's nothing alarming, just consolidating its gains. Some of these stocks like IRDA, etc., are just sort of catching their breath after the big rally that we've seen. But the broader market momentum continues, Nigel.
Well, that's right. So, quite a few stocks moving around out there. In terms of stocks that are moving up, IRDA continues to move up. Another big volume mover is SEPC. That one, I think, is doing a fundraise. So that one as well up close to 2%. One of the top volume movers out there. Karur Vysya Bank, that as well is up close to 2.8%. In a few minutes, close to 10 lakh shares getting traded already on that one. On the flip side, you have Bank of India. They had done a fundraise of late. The QIP, which is subscribed numerous times. I'm wondering whether there's some supply coming out there, because in the first minute itself, Bank of India is the one we're talking about. That's down close to around 6%. Massive volumes been seeing on that one. So we'll have to get a quick check on that one. Suntech, as the screen is telling you, well, we were expecting some kind of a block to take place, and that's precisely what's happened. So a large trade takes place. 4.5% equity changing hands at around 482 rupees a share. J&K Bank as well come in for some profit taking. And IRDA, after opening 3% up, that one's now down. Some kind of sanity actually prevailing, because that stock is corrected close to 5% from the morning tick itself. Prashant.
All right, well, it's 16 points lower, Nigel, on the index, 20,890. So neither here nor there, kind of a start. But as we were saying, maybe, there's, of course, the big Fed decision later tonight, which perhaps is responsible for some of this. Otherwise, overnight handoff, etc. Just if you look at the US market change, was positive. What else? Dixon started, I think, 3% higher, but like yesterday, Dixon is now flat. By close, Dixon had given up all of those gains and was flattish. PI, we already mentioned, 2.5 higher. Inox Green was a big mover yesterday. I think there is some initiation reports there from brokers. 4% higher on Inox Green. HPCL is up 2.5%. Karur Vysya is up about 2.25%. KPIT Tech is starting about 3% higher. Indigo starts about 2% in the green. Oil down sharply. Motilal Oswal Financial Services is up about 5%, 1,274. That's a large one. And I'm only mentioning things with large volumes for this point in the day. And I think Karnataka Bank is another one which starts up with decent-sized volumes and gains. Bank of India is down 6%, I think, as we mentioned. Stocks at about 109 rupees on Bank of India. So that's a large cut coming through. And Paytm is down 2.5%. It's already in the last 30, I think today is the 35th or the 36th session. It lost 40% of its value. The high was almost exactly $1,000. It's at 600 now in exactly 35 sessions. Suntech Realty, we mentioned. Adani Transmission is down 4%. It's coming up with large volumes. Adani Green is down another 2%. So some of the big gains, 30, 40, 50% gains that the Adani Group stock saw last week, mild givebacks, nothing very large at all. And Laurus Laboratories is down about 2% or so as well. So that's the overall picture. Market breadth is still negative, although the Nifty is down about 15, 16 points. Sonia.
Okay, so there is a lot that's happening in the market right now. So don't be fooled by the headline index, right? The headline index may be flat, but plenty of stocks are looking pretty good at the moment. IRDA is once again rallying, so 2.5% higher on IRDA as we speak. A lot of stocks hitting fresh highs. NHPC is at a fresh high. PFC, Tata Power at fresh 52-week highs. REC, NBCC. Hotel stocks have started to come back in a big way. Mahesh Nandurkar, who is the India strategist at Jefferies, joins us now to talk more about the market and, of course, the way forward as well. Mahesh, thank you so much for joining us. And, season's greetings to you, your entire team at Jefferies. It's been a rollicking year for the market, right, so far. Do you think we have it in us to build on to these gains ahead of a big election year? And how are you positioned now in the index?
Hi, thank you for having me here. The market has had an excellent 2023 for sure. But I don't see any reason to be excessively pessimistic here, because if you look at several global factors as well as a lot of domestic factors, a lot of positivity around those factors, I would say. And I would say that yes, I mean there could be some minor pullbacks here and there, which cannot be ruled out. But if you take a view from the next 12 months or next 24 months, my sense is that we are in for a strong double-digit returns from the markets. Obviously, the composition of what goes up and what goes down will probably be slightly different. My key thesis is that what has necessarily worked in the last, say, 5 or 10 years, I'm talking about a slightly longer time frame, will not necessarily work in the next 5 or 10 years, but a lot of opportunities for long-term investors to take bets here and to profit out of it.
What are you hearing from foreigners, Mahesh? That's the big cohort which has stayed out. The market's gotten to where it has gotten without very much help from them.
Absolutely.
So far. Are they going to come back in a big way? What are you hearing?
Yeah, I think so, because right now what we're clearly seeing is that India is beginning to show up a lot on the on the radars of a lot of global investors, not just the typical Asian market investor or emerging market investors, but a lot of investors with global mandates. And rightfully so, because I think in about 3 years' time, India will be the third largest GDP. We're already the fourth or the fifth largest market by the market cap terms. But clearly, if you look at some of the global indices, India's neutral weight is still below as compared to where it should be. But given the changes that are happening globally, especially the Chinese markets is no longer in a big favor at this point in time. And my sense is that you will see more inflows from the foreign investors as well. It's just that a lot of foreign investors are staying out at this point in time on the valuation concerns. But we have seen this several times in the past as well, and I think something similar will happen over the next 12 to 24 months. That this concerns about the valuations will slowly begin to be absorbed by the foreign investors as well. That's clearly the sense that we are getting.
All right, Mahesh, good to see you in our studio. Mahesh, one theme that has really played out is the PSU space. And you all have been positive on a couple of names out there. Coal India, NTPC. Now we're looking at the PSU basket and saying the market capitalization is 50 lakh crore. It has valuation support as well, if that is a parameter. Do you think it has more legs from here on? Last 18 months belong to some of these PSU names. The next 18 months as well, will they continue to remain the leaders?
Several PSU stocks are actually looking very reasonably valued, as you rightly said. And the market and the investors will be focusing on that part, the valuation part, much more. See, again, I'm taking a slightly longer term view. I mean, over the last 5 to 10 years, the way to make money in the market was ignore valuations and just stick with quality, just stick with predictability, and then you end up making money. But I think that has clearly changed given the fact that India's capex story is unfolding, and clearly we are in a period where a lot of small and mid caps are actually outgrowing their larger peers by a wide margin. And clearly the focus has come on the valuation side. So come back to answer your question on the PSUs. I think a lot of these stocks are trading at attractive valuations, be it on the power side, utility side, power financiers, coal mining, and even some of the banking stocks as well. So I see plethora of opportunities in the PSU space.
Okay, plethora of opportunities in the PSU space. Your view echoes the sentiment that many experts have had in the recent past as well. We were speaking with Sridhar Shivaram a couple of days ago, and he said the best way to do it, perhaps, if you're struggling to find stocks, is go through some of the PSU mutual funds, right? There are a couple of good ones out there as well. All right, you have a very high conviction in the capex plays, and in the broader market, some of the stocks that you've liked are names like Polycab, KEI, Kajaria Ceramics, Thermax. These are, of course, great names, but the rally has also been stupendous here. If someone has missed out on this theme entirely, is there still more scope?
Definitely. And I'll just give you my personal example here. I used to be a consumer staples analyst about 12, 15 years ago. And most of the stocks in that space used to trade at 20 times P multiple, some of the large cap names. And when I would pitch those stocks to several investors, they would say, 20 times P multiple for a company that is growing its earnings by 12, 13%, I'm not paying that much. And what has happened over the last 10 years is that 20 became 30, 40, 50, 60, 70, right? So the definition of what is cheap and what is expensive has changed materially over the last 10 to 15 years. And that does happen when some of the key themes emerge. So as I said, last 10 years, the theme was stick to quality, stick to predictability, ignore valuations, and those stocks have really rallied from 20 times to 70 times. Some of the names on the capex side that you mentioned have got re-rated already. And because we have this tendency of comparing everything with what has happened in the last 5 years, and you'll see, oh, these stocks are trading well above their last 5-year averages. But I think the market will come to terms with it, in my view. And given the strong earnings growth that many of these companies will be delivering over the next several years, and even if there is no further re-rating, the earnings growth alone should drive 15-20% plus returns from here on in many of these stocks.
In large part, it's also a function of just too much money, right, coming into equities as an asset class. I mean, isn't that a big part of it?
It is, absolutely. So you cannot really ignore that. And as you rightly mentioned in the beginning, most of the market rally or movement that we've seen so far has been driven by domestic investors, and foreign investors have largely stayed out. But I think the sense that we get is a lot of investors have also been on the sidelines, as I said, one, because of valuations, and secondly, also because of upcoming the political events. And there is some element of uncertainty in the minds of a lot of global investors that have not participated in India so far. So while the consensus is pointing towards one thing, but many global investors still want to take a bit of a pause. But I think, as I said, both these
still pause because of the political
uncertainties, and they want to have kind of see the final outcome.
So these are based on what you're telling us is this is based on the conversations after the election results. I mean, after,
before, generally over a period of time.
There's a big difference, Mahesh, right? I mean, before that weekend and after that weekend, because of the results that we got.
No, that's why the market moved up the way it did.
Yeah.
But it's not necessarily that the same global investors that we are talking about I mean, we have seen some flows coming in, but I think still I see that there are a lot of foreign money sitting on the sidelines. And so therefore I mentioned that while there could be some pullbacks, but those pullbacks will be short-lived because there's a lot of foreign money waiting on the sidelines. So those dips will get bought into.
Well, Mahesh, China +1, Russia +1, India is gaining. In a few years, I think we'll be saying India is the only one. That will be pretty good for us as well. And we've discussed a few themes actually in this conversation. But, and on select themes, well, some are bulls, some are bears. But the one that you all have been quite bullish on, which has not been really a consensus call, has been Honasa or Mamaearth. And kudos to your analysts as well. Came out with a note when I think the stock was down 15 or 20%, if I remember correctly. Some of these names, do you still believe, even at these valuations, there's plenty of value still remaining on the table?
Yeah, so, as I said, I cannot comment on specific stocks, but I definitely believe that there is, a lot of opportunities in many stocks. I mean, I think banking sector is one name which has lagged quite a lot over the last, 1.5 years. We see value there. We discussed PSU stocks already. I think there are a lot of names on the capex space that we like, and despite the re-rating that we've seen, can see meaningful upside even from here on. I would say the same thing about real estate side as well. Consumer side, I believe that one will have to be really, really selective.
Okay.
And, one cannot just stay overweight on the broader consumption basket of stocks and expect to outperform. I don't think that's likely in my view. So one will need to be very, very selective, in that space.
Okay. All right. I have 2 little kids at home, so I know about the brand, but the valuations, I think your analysts are best placed on that one. Just one quick word on the banking space. If they're going to do well from here on, and given the kind of part re-rating we have seen in PSU names, what would your preference be, private or public sector banks at current reckoning?
I think even the private sector banks are now looking very attractive on valuation.
Okay.
So some of the large cap banks, I mean, I would say the large cap banks, or I would say broadly speaking, the banking sector as a whole is the only sector which is trading below its historical averages, and including some of the large cap names. Which I think can be great compounding stories. Yes, some of the PSU banks can be outperformers, some of the smaller private banks can be outperformers, but even the large private banks, I think, will be very strong compounding stories from here on.
Okay.
One of the areas you've been very bullish on is real estate, Mahesh, right? For a long time. Are you still gung-ho?
Oh, absolutely. Absolutely, for sure. I think we are in the 3rd year of the property market upcycle, and I think it's a cycle that will last for 8 to 10 years. So we have a long runway for the property stocks to deliver
And stocks are capturing how much? I mean, like 3 years out or 4 years out, what are they capturing? As broadly, I mean, some of the leaders which have done well. How much is in the price is the question? Or you think there's a lot of money to be made here?
I think you will probably see surprises coming up on the volume growth side and broadly the earnings growth side as well. And, one of the big misconceptions about the real estate sector is that because of the accounting policies that they follow, the stocks move on the back of pre-sales. But by the time those pre-sales reflect in the revenues and, and earnings, it's like 4 years out because the developers follow this project completion method. So recognize revenues and profits when the projects are completed and handed over. That's like 4-5 years down the line. So seemingly the stocks appear expensive if you look at near-term P multiple or EV by EBITDA multiple, but actually they are not. Okay. So I think, strong runway ahead for the next 3 to 4 years.
I just have to ask you about this one sector. So I'm really excited about this whole green energy transition, right? I don't know if you share my excitement, but I mean, just look at that. Adani Group, for example, is investing $100 billion in this green energy transition. And so many renewable energy stocks, whether it's Startup Power, Inox Wind, all GSW Energy, all doing well. But for someone who is still looking to partake in this move, is it worth their while?
I think green energy, and I would say in the same breath, the traditional energy as well. Because, what we are seeing is that the power sector as a whole is a space that the economy or the country as a whole has underinvested in the last 4-5 years. And we are looking at the power sector utilization rates moving beyond 80%, something that we've never ever seen in the history of the power sector. So there is going to be strong returns in the traditional energy side as well as the green side as well, I believe.
All right, Mahesh, we'll leave it there. Thank you very much for joining us. It's a pleasure having you with us here.
Thank you very much for having me here. Thank you, Prashant. Thank you.
Well, I think we've got the market, which is down, 2 points or so. So there's not very much going on here at all. We're at about 20,900. So blinking red and green, literally, but with market breadth, which is looking pretty strong. Nigel, we've got the next management with us.
Well, let's get straight to the next management. Then we're looking at Manappuram Finance in today's trading session. And in fact, that one has been in focus. The street is a little bit, they want to understand what kind of loan growth are they looking at, as well as what's going to be the split between gold as well as non-gold. We have Mr. Nandakumar, the Managing Director and the Chief Executive Officer of the company, who joins us on the show. Hi, Mr. Nandakumar. Thanks so much for joining in. Well, tell us, what kind of a growth outlook do you have for us? For FY24, FY25, what kind of growth are you looking at on the AUM front? And also split it up for us in terms of a mix. How much of it is going to be gold and how much of it is going to be non-gold?
So, as we have told in the past, we are on the track of a growth of around 20% on the consolidated book. We are growing non-gold also, non-gold particularly MSME, car finance, commercial vehicle finance. These secured business we are growing. At the same time, our Ashirwad microfinance, our subsidiary, that is also growing in a robust manner. So gold is this quarter it is flat. So, but why it is flat? Because there were many festivals during this quarter. That could be the reason, because of redemptions were relatively higher as used to. So we expect around 7 to 8% growth in gold also during the current fiscal. So overall, we are 20%.
Consolidated at 20%, Mr. Nandakumar, and gold should grow by 7-8%. Okay, we got that. But what does gold as a percentage of a mix come down to? What will be the ideal mix for you?
So, as we have been telling for some time, the ideal mix what we intend to have is 50-50. 50% gold, 50% non-gold. So that with the gold also we are promoting the secured loan growth like commercial vehicles, car, and MSME as the major growth drivers going forward.
Okay. Mr. Nandakumar, hi, good morning. The RBI recently stepped in and said they asked banks and financial institutions to raise risk weights on unsecured lending. In an indirect way, do you expect more competition from banks in the gold segment because of this, because they'll have to go easy in other segments? Competition from banks in any case over the last couple of years has been a concern. Do you think this will increase it?
So competition will always be there, but the product the customer segment we handle is slightly different from those going to the banks. Whereas what our customers expect is a quick turnaround time. They should not miss their day's wage, etc. That is the type of customers we have, and we cater to their need of meeting their time requirements. So that's even though the competition will be there, but we expect, because of facilities like online gold loan, doorstep gold loan, etc., we'll be able to protect the customer base.
Okay. In terms of cost of funds, what is the cost of funds currently? What's the outlook? And does the RBI ruling impact your cost of funds in any way?
Yeah, the cost of funds now is around 8.5%, and we expect 20 points bips growth as far as the borrowing cost is concerned. That is the expected increase is around 20 bips. More than that we don't expect.
What is the yield comparison between gold loans and non-gold loans?
Yield for gold loan is around 22%, and non-gold yield is around 19%.
Okay. Mr. Nandakumar, I just want to understand, your yield is more than 20%. Banks are giving it at the low teens. How does this work? I recall in the past you had done those teaser rates which pulled back a little bit. At that point of time, it was, you're looking at the growth. Now that is done and dusted, but how do you position yourself going ahead? Because otherwise it gets very, very competitive, right? The yields are so high for Manappuram, even in comparison with your closest competitor from the gold finance space itself. So, give us, how do you think about it?
See, our average ticket size is around 3 months, and the duration, and the ticket size is around 50,000. 50,000, for 3 months. What the customer is looking at is the quick turnaround with regard to the pledge time as well as redemption time. That saves is 2 days. That is most important for the customer, for our customer. So, so naturally, our OPEX, because of that manpower requirement, everything will be higher. So the OPEX remain high, and that is being passed on.
Okay. All right, Mr. Nandakumar, we'll let you go on that note. Thanks a lot for joining in. Appreciate your time here on CNBC TV18. Well, that is Manappuram Finance on the business as well as the way forward. The market is very quiet, but there are plenty of stocks actually that are hitting fresh highs. So just keep an eye out on that. In the broader markets, you have something like a Mahanagar Gas that's piling on the weight now, fresh high over there. It's gained about 40% this year, Mahanagar Gas. It's coming back in a big way. And TVS Motor is another stock that I'm looking at very closely. Fresh 52-week high on TVS Motor. Remember, Ola Electric will be filing its DRHP on the 20th of December. So the Ola Electric IPO is expected to come out, and its closest competitor in the electric two-wheeler space is TVS Motor. So this stock will definitely be in focus around that as well. Let's slip into a quick break. On the other side, we'll connect with the management of DOMS Industries and India Shelter Finance Corp. Both the companies move a step ahead to their Dalal Street debut. The IPO is open today. More on that in a bit.
CNBC TV18, embarking on a quarter century of excellence.
Co-presented by
CNBC TV18, embarking on a quarter century of excellence.
Okay, welcome back. 10 points lower on the Nifty, so not very much going on at all in the secondary market, but there is a lot going on in the primary space. We've got IPOs coming in thick and fast. And the next one we're talking about is generating a lot of interest. DOMS Industries is 1,200 crore IPOs opening today, of which 350 odd crores is fresh issue and 850 crores is via an offer for sale. The company plans to use the IPO proceeds partly to finance a new manufacturing facility and to expand their production capabilities. Santosh Rasiklal is Santosh Rasiklal is Managing Director and Rahul Shah is Chief Financial Officer at DOMS Industries. Both are with us here in our studios to tell us more about the company, the business, and of course the offering. Gentlemen, great to have both of you here.
Thank you for having us here.
Appreciate it. As we were just discussing in the break, all three of us are pretty familiar with the product because all of us have kids, varying age groups who use the product quite frequently. So we're talking about pencils, which is the largest kind of component of the business. There is stationery, and then there is art supplies as well, all branded. Just tell us a little bit, Santosh, about the market itself. It would seem that it's a pretty competitive market out there, right? What is the opportunity? What is your market share in each of these segments, and where exactly is the focus out of the three?
So I would like to start here with thanking our consumers who are mainly kids and young parents. Sir, here I would like to say that DOMS has an elaborate category split where we have our category which are scholastic stationery, scholastic art. We've got one category which is kits and combos. We've got a category which is like hobby and craft. We've got a category of office. We've got a category which is paper stationery. So we've got all all interesting categories in place. Of course, if you really observe and deep dive, each categories are one of the, I think one of the important categories to have for a child today. What we have been doing here is we have a very highest level of R&D approach here in the company. So if I take you through a little bit of our journey, where almost 30 years of our business was OEM. And what we always say that this was not an OEM business. This was a meditation we did, for our product development and for our business. So through this particular experience, we've been able to bring in the product line, which are probably much beyond the expectations of our
When you say OEM, you meant you sold to businesses
So we were catering to good brands of India.
Right.
And after 2005, we decided to enter into our own branded spree, and this is where DOMS brand got discovered.
Absolutely. I think all of us are familiar with DOMS, right? And I must say you're a big hit at parties, kids' birthday parties. In the last 5 years, all the return gifts are DOMS stationery in some form or the other. So it's good to have you here in the studio. But I want to talk a little bit about growth. Rahul, come in on this. 2 years back, I think in FY21, you were sitting on about 400 crores of revenues. In 2 years, you went from 400 to 1,200 crores of revenues by the end of FY23. What is the game plan over the next couple of years? What kind of growth rates are you guys looking at?
So, ma'am, if you see, historically, since when we launched DOMS brand, we've been growing at a continuous healthy space, both in terms of revenues and margins. FY21 and 22 were slightly impacted years for us, considering the COVID. Most of the educational institutes were non-operational, shut. But I think we could say that FY23 was a result of much of the pent-up demand in the market, opening up institutions, which helped us to achieve this number. But we recently reported our H1 numbers, where it's more of a normalized period. Our H1 sales was about 760 crores with an EBITDA margin of 16.7% and a PAT margin of about 9.7%. So this is more of a normalized period.
But when we talk about growth rates, is it a 15% growth, 20% growth that you can reasonably do over the next couple of years?
So, ma'am, our growth is, more in terms, our growth comes from more in terms of how much fast we are able to add capacities. Today, as a company, we've been, doing a lot of capex.
Okay.
In the last 3 years, our collective capex has been close to about 175 crores.
Okay.
Recently, we've acquired a 44 acres of land parcel in Umargaon, where our main manufacturing units are installed. Here we plan to start operations, construction of these buildings in January 2024.
Okay.
And the first, out of the 4 buildings that are planned, first building is likely to be operational by, with machine installation by October 24 and operational by in the next 12 months.
Okay, got it. All right. Hi, gentlemen. Thanks so much for coming down to our studio. Well, let's focus on a couple of these numbers now. You're roughly doing on an average 12 to 1300 crores on an annual basis. Obviously, the first half of the year has been pretty good. But at optimal levels, what kind of revenues can you do? Point number one. And you'll have raising close to 350 crores that goes back to the company. And part of that is going to be used for expanding capacity. How much are you all spending? And what is the asset turn? What I'm trying to get is, what is the potential revenue post this capex? Please go ahead.
So what we have been extremely and utmost conscious is about how we are doing our asset turn, with our investment. So
yes.
Historically, you will see that we've already, been at an asset turn of 3x plus.
Okay.
And we believe that ahead we would also focus on maintaining this asset turn of 3x plus. This is something which we are right now very conscious about.
Okay.
In terms of numbers, I think, as a company, we've always believed that how we, as Rahul Bhai said, that, how we, increase our market share.
Okay.
And that is going to be extremely, I think, our agenda and our aspiration.
So out of this 350 crores, how much are you all spending on the new capacity?
Yes, we are going to spend 280 crores.
280 crores and asset turn of around 3 times is what you're saying. So roughly around 800 crores approximately is what you can do from this investment. And peak potential?
So basically, this entire new project is about 450 crores.
Okay.
The land for this project has already been acquired for approximately 73.5 crores. 280 crores is something which we are going to raise, and another 100 odd crores will be spent from internal accruals. So the total project is about 450 crores.
So you can effectively do 2,200 or 2,500 crores at peak levels, including this capex, or is it more?
So, sir, as of now, the more commitment is towards the asset turns and also towards the achieving the market potential, increasing our market share. So I think this is something which we are very conscious about right now. Of course, going forward, once we are very closer to our business plans ahead, we'll have more interactions.
Okay. Absolutely. Rahul, just a quick word in on, so the most important category in stationery is pencil, right, for you?
So scholastic stationery definitely is the largest category with about 46%
when you say
of sales.
Stationery, it means?
Means pencils, erasers, sharpeners, scales, mathematical boxes, out of which the single largest product, out of so many products is wooden pencil, which is about 32% of our sales.
Overall sales?
Overall sales, yes.
Sales. Are there any other adjacent categories, pens, etc., where, you're already present, you're kind of expanding into?
So yes, like if I have to say, the other key product categories that we have is something like a mathematical box. We have a very wide range of art material. We've gained a significant market share in this segment also in the last few years. Plus paper stationery, we entered this company through this business through an acquisition that we did in 2015. Today, this category contributes about 10% to our total sales. Kits and combination packs, like you all are aware, that's something which is doing really well. It's about 9% of our sales today.
I have a couple of...
Sorry, so I would just like to highlight here that the paper stationery business, we entered this company, Pioneer Stationery, when it was at a revenue of 4 crore. We have in 2023 done around 138 crore from this business.
Yeah.
And possibly we've been able to be a pan-India brand, for this particular category.
Just one, just to complete that point, what is the sort of, in a way, what they call moat for the business? I mean, what is the big, is it a brand? Because it's a very, in a way, it's a very crowded market, right? There's so many other players, etc. You're a strong player with a strong recall. Or is it distribution? Or is it lower prices? What is it that will help you grow and defend your share, in your opinion, Rahul?
So it's a combination of everything, first and foremost, we always consider, our product are our hero, they are a real celebrity. So we focus a lot on product development. Since the time we launched the DOMS brand, the idea was simple, that any product that comes out from the DOMS umbrella has to have something in it which connects to the consumer. So we focus a lot on product. This comes from our focus on R&D, where we have 50+ strong team members who are working in development and designing of the product. Then is definitely our manufacturing infrastructure. All these categories, almost 25+ product segments, all are manufactured in-house. We don't believe in trading as a business. Everything we manufacture in-house, and at the same time, each of the product is completely backward integrated. Today, if you talk about pencil, every component that goes in manufacturing of a pencil is something which we manufacture in-house. Similarly, across all our product categories.
Okay.
And last is the brand, and the strong pull that we are seeing from the brand. Our consumers are loving the brand.
Absolutely. Yeah. I mean, there's no questioning that. Just a couple of concerns before we wrap up. One is your export contribution has gone down. I mean, a couple of years ago, it used to be 25% of your business. Now it's less than 20%. Are you facing any major pressure there? And do you plan to bring it down further?
So, ma'am, two parts to this answer. First and foremost, in the initial years, FY 21-22, you'll see the percentage of export being a little higher, purely because the Indian education system being shut, demand in India was less, but export markets were still open. But over the years, our export has been close to that 20% mark. And our focus has always remained on the domestic market. Today, our, enhancing the DOMS brand, fulfilling the requirements of our domestic market is something which is utmost importance. So, we will continue doing that. We'll focus on the domestic market to enhance our sales.
Okay, all right. We'll let you go on that note. We have many more questions, but I think we'll leave it for another day, perhaps closer to the listing.
Thank you very much. Yes. Thank you so much.
Thanks a lot.
And thank you for, providing so much for our children, right? Our children love your products. So,
thanks.
Your main consumer. All right. Well, let's do one thing. Let us take a quick commercial break on that note. Lots more coming up on the other side of the break. But, okay, we have another IPO. There's one more IPO issue that's coming through today. India Shelter's 1,200 crore rupee IPO is opening. So let's get the management in. Of this 1,200 crore fresh issue, 800 crores is a fresh issue and 400 crores is an offer for sale. The company has raised 360 crores from anchor investors. Rupinder Singh, the MD and CEO, and Ashish Gupta, the Chief Financial Officer at India Shelter Finance Corporation, join us now to talk about that. Gentlemen, morning to both of you. Mr. Singh, let me start with you first. If you can just, for the benefit of our viewers, people who are perhaps looking towards your IPO, tell us a little more about your business. What kind of growth are you looking at? What kind of asset quality are you targeting over the next couple of years? I think you're on mute, Rupinder.
Yeah, very good morning.
Go ahead.
And thank you for calling me on my channel. So we got the anchor book yesterday. So good names like Goldman Sachs, ICICI, Nippon, Kotak, Axis, TD International, all supported us in this piece. Now the issue opens today, and we are quite positive. And thanks to all kind of support from entire ecosystem. So if we talk about the business per se, the India Shelter Finance Corporation started way back in 2010. We are into this same operation from last 13 years. It's a housing finance company, purely housing finance company with a focus on affordable side. We largely capture tier 2, tier 3 markets for the affordable, and our focus remains on self-employed. So category of customer where the income is between 25,000 to approximately 55, 60,000, and the average ticket size for loan remains around 10 lakh rupees. So this is the focus area. And when we started, those were the days for home loans, which are more into prime segment, towards more on the salaried side and the creamy layer of society. At that time, we played this punt, and I think giving good fruits till now. It's working well for us.
Can you just tell us a little more about your customer profile? What is the EMI to income ratio that you have on your customer base? And what is your game plan? I mean, are you looking to stick to this customer profile, or are you looking for any kind of change, diversification, etc.?
So this customer profile, majorly you find the markets we operate into that. If you see the EMI to income ratio, normally it is around 50 to 55% where we offer these loans. In fact, one more important piece that we keep in mind, apart from this ratio, is the loan to value. That is again the collateral what the property has been offered by the customer. So we have 50 to 53% of loan to value there altogether. And this is helps in terms of controlling the risk also, because a lot of equity from customer side also comes in to play the role out there.
All right. Good morning, Mr. Singh, as well as Mr. Gupta. And thanks so much for joining in on the show. Well, with this fundraise, will you all be pushing for a rating upgrade? Point number one. And how does it change your CRAR?
So our business is all about three important pieces. One is money, which is a capital, a raw material for us because of finance business. Secondly, the people who drive the business, that's a team around there altogether. And we also blended a technology around there. So today, the net worth, as we see the September number, is around 1,375 CR. With this infusion of 800 additional number coming around, we will cross the level of 2,000 crore plus capital. And that's an important benchmark to have if we have to look for the next level of growth. Obviously, when we have to go to banks for next level of borrowing, we can request rating agency for upgradation also, as we stand today with A+. So these are the opportunity lies as you increase capital. Housing finance company normally have a very strong CRA, and just because risk weightage is quite strong, thanks to the regulator in terms focus around that side, consider we a less risky profile around that side. So more focus is always on the leverage side. So if we see the leverage particularly, it was 3.5x when we see the September number. With this infusion of fund, it will definitely go down. But the objective is another 12 to 18 months, we should come back. So that is a thought.
Mr. Singh, good morning. Mr. Gupta, good morning. Mr. Singh, just what you said, self-employed, the affordable side, right? That's the target segment for you.
Yes, absolutely. And that also will be a good thing.
Right. We had the management of PNB Housing yesterday with us, and they're also focusing on the affordable side. And we were discussing the supply there, and he was telling us that most of the affordable housing is, only 20% is new construction coming up. The rest of it is resales and people constructing their own houses, etc., etc. Would you concur with that? And does that pose any risks higher than if, say, for example, it was more organized in that sense?
So India is a vast geography we see. So today we are operating in 15 states and more than 200 branches. So deeper you go, the aspiration of building houses coming up thanks to the good schemes like Pradhan Mantri Awas Yojana and support from government in that side. So a lot of awareness is now which is coming up, which was not there, say, 10, 12 years back itself. So we are targeting a deep into markets. The segment of customer with the ticket size itself is around 9-10 lakh rupees. It's a very low when we compare to the large institution banks who try to cater the requirements majorly in the top 20-25 cities. So if you go to smaller places, we are in the locations which most of the people may not be aware of today, but still they have a strong population. The growth is coming around at least. And if we see our record of last 4-5 years, there's a consistency in growth. The CAGR of 40% we are constantly giving around. And the way we are seeing the traction in marketing in recent time, we find that there's a lot of opportunity on that side.
What proportion of people who borrow from you, Mr. Singh, borrow it to build their own houses?
Almost 25 to 30% are for the self-construction. Then there are remaining 20-25% who will the sale purchase. Then there are around 40% who will go for loan against property also, because then to mortgage the same kind of a scenario. So these are the three aspects.
Okay, Ashish Gupta, who's the Chief Financial Officer, is also sitting by with us. Ashish, Rupinder briefly mentioned loan against property, so I want to talk a little bit about that. Your LAP book is currently at 40%. Do you think this is a high risk for your business? I mean, because it may have a high amount of unsecured book as well, or do you consider this as an opportunity?
So we have, we have 40% LAP book, but the kind of discipline we have maintained, in our underwriting processes is pretty much similar as we have done in case of housing loans. So, if you look at our LTVs of LAP is around 45% average, vis-a-vis home loan around 55%. So it's a less riskier product as compared to home loan. Though there is a difference in the end use, where in case of housing, the money goes for, for the purchase or for the construction of houses. But in case of LAP, the money goes for the business. So given the, our conservative underwriting processes, wherein we always keep self-occupied property of the borrower as collateral, we think that it is as good as home loan.
Okay. So you're not facing any issues with respect to repayments, etc., from your LAP book, right, at the moment?
If you see our historical trend of delinquency in the LAP book, it is pretty much similar as the home loan. So our delinquency, our GNP number is at around 1% total. And in case of home loan and LAP, it is pretty much similar.
All right, final question then before we let you go. What about geographic spread across the country? How do you see that changing, say, in the next 2 to 3 years?
Actually, the 15 states which you cover, that covers almost 90 to 94% of the mortgage market of country. So there is a lot of scope. We are just 200 branches in 15 states. We are not even have covered the entire districts around that side. So going forward, we'll see a lot of penetration in these markets in terms of opening new branches, tier 2, tier 3 and beyond that. Because as you know, the confidence kept building, and our also say if the geography keeps increasing in form of distribution and strengths. So you will see a lot of traction in terms of opening new branches. So we expect 35, 40 branches get added every year if we see the next few years going forward. In these particular 15 states, we are still operating.
Thanks so much, gentlemen, for joining in and giving us a sense in terms of how you see things shaping up. We're looking forward to the listing, and then we'll have a deeper chat. We'll get some, guidance as well in terms of the way ahead. Well, when we were having those chats with, both those two managements, well, the markets have moved to the low point of the day. The 20,850 odd level, that's been the level that's held out for the last few sessions. The crucial support is at around 20,700 to 20,850, but the markets have moved lower. The Nifty bank as well is down close to around 200 points odd, and there is some selling. I think you pull up both the indices, the banking index has moved lower, and the IT index as well. You have a couple of stocks in there that has seen some selling. TCS is now down close to around 2%. Get the IT index up for you on the screen. Mitesh Thakkar is back with us. Mitesh, we're down 80 points, holding at around 20,820. Where does support come in at? And fill us in with your fresh trades.
Yeah, so I think on the index, this looks like to be some kind of a pullback going on. I think 2,700 is the level which I would, consider as a important support area. This entire rally, which started from 18,800 to about 21,000, maybe now getting into a consolidation of pause kind of a mode. And if we hold on to 20,700, I think we'll just see a sideways action and then possibly a continuation. So for the time being, looking at 20,700. On the stock side, I have a buy on Hero Motors. Disclaimer, we have recommended this to our clients, so there's vested interest. That's a buy with a stop below 37.50 for targets of 3,900. And a buy on Chambal Fertilizers with a stop at 352, buy for targets of 366.
Okay. Mitesh, coming back to you for more, thanks for those trades. Canfin Homes is up about 1.4% or so, and it's had a bit of a rough ride, right, up and down, but more up now. So the stock fell, remember, 13% in 4 days on fears of fraud in one of their branches. The Canfin management yesterday clarified on CNBC-TV18, said that they've carried out a check at all their branches and that there is no incident of fraud in any branch other than the Ambala branch. Morgan Stanley, has written a note citing CNBC-TV18's interview from yesterday, and they are, while citing some downside risk to their own forecasts, they maintain an overweight rating, essentially saying that valuations actually seem to be still very attractive. So that is Canfin Homes in focus. Just a quick word on the Nifty. We are below the... so in the morning, we were talking about how it's an open question mark, whether in the very near term, the move is maturing. The up move is maturing. And 2850 was the support, which we've been highlighting the last couple of days, is the recent low. We are below it. Yesterday, we did not break it even intraday, but today, right at the word go, at least in the first hour, we are just under it. What will matter, of course, is the close one way or the other. So we will watch out for that. 1/3% down after yesterday's near 0.5% cut. We'll take a quick break here. Commodities in focus. Manisha comes back with what she's watching out for. Stay with us.
CNBC-TV18 embarking on a quarter century of excellence.
Stock market, huh?
CNBC-TV18 embarking on a quarter century of excellence.
All right, let's shift focus now to the commodity markets. Manisha Gupta is standing by to tell us what's on her radar. Manisha, over to you.
Sonia, thank you for that. I'm looking at the crude oil prices where we have seen 4% of a decline in the overnight market, so that the prices are now trading at around 5 to 6 month lows. 4% down overnight, and we are down 12% now in the past 1 month when it comes to the crude oil prices. Well, the US inflation data that has come in is now bringing in a probability of absolutely no rate cuts in the first quarter of 2024. I mean, that was a number that the markets were leaning on way too much, and that is out of the scene and is the reason you have seen that premium go after the markets. So we are trading below $70 a barrel for the WTI crude and below 75 right now for the Brent crude prices also. Also, when you look at the OPEC and allies output cuts, since the kind of discord that they have, and this is something that the markets have been factoring in case of prices, that there could be still surplus in this quarter and the next as well. Add to that the EIA data that suggests that the US output will continue to grow as we go forward. So 12.93 million barrels per day in this year and a higher 13.11 in the next year, which is an all-time highs. Also, markets are looking at record productions, not just in US, but in Canada and Brazil as well. So the non-OPEC crude output is expected to continue to grow in the next year as well. Even as there are concerns about Yemen Houthi attack on Norwegian commercial tanker, but the markets are in no mood to take in any risk news into the prices right now. It is all about lower demand, higher supplies, and which seems to be putting pressure on prices. EIA also says that they are now downgrading the Brent projection in sense of prices for the next year by $10 to $83 per barrel of an average for the next year. And that's the kind of statement you have seen come in from various other agencies as well. S&P Global is another one which says that 2024 demand estimate is down by 1 million barrel per day versus the supply growth. So you are looking at a surplus going forward into the markets. It also is about a lot of data watch that the street will watch out for. To begin with, it's going to be the COP28 negotiation that the markets has an eye on, which is still awaiting a new draft deal on phasing out of fossil fuels. And then it is about OPEC monthly report that comes in today. And most importantly, the US Fed meeting announcement will give direction.
All right, let's take a quick break on that note. Thanks a lot, Manisha. On the other side, our special segment, it's the economy. Lata will connect with Ashish Agarwal, the Vice President and Head of Public Policy at NASSCOM, and Gaurav Karnik, the partner and real estate leader at EY, to decode opportunities in commercial real estate space after the Commerce Ministry amended the SEZ regulations. Stay tuned.
CNBC-TV18 embarking on a quarter century of excellence.
Co-powered by